In the midst of confusion, the clearest signal often comes from history's greatest investor. Be fearful when others are greedy, and greedy when others are fearful. While markets have whipsawed investors in 2025, Warren Buffett has quietly been making his boldest moves in years. After sitting on a record $342 billion cash pile in late 2024, Berkshire Hathaway has begun deploying capital in ways that signal a dramatic shift in Buffett's outlook. According to Bloomberg's Billionaire Index, 499 of the 500 richest people on Earth lost money during the recent market turbulence. The exception? Warren Buffett, who actually increased his net worth by $12.7 billion during this period. Today, I'm revealing exactly what Buffett is buying in 2025, why he's making these specific moves, and how you can apply these same principles to potentially transform your own portfolio regardless of market conditions. This isn't speculation. This analysis is backed by Berkshire Hathaway's latest 13F filings, Buffett's own statements, and historical patterns that have made him the most successful investor of all time. Let's start with Buffett's current portfolio allocation, which reveals his strategic positioning for 2025 and beyond. Berkshire's portfolio currently consists of three main segments: one cash and cash equivalents, $342 billion, a massive 41% of Berkshire Hathaway's total portfolio; two stock holdings, $271 billion, 35% of the portfolio; three wholly owned businesses, $188 billion, 24% of the portfolio. What's remarkable is that cash is currently Buffett's largest position, an asset he's historically claimed to dislike holding in large amounts. At 4% interest on treasury bills, he's earning approximately $13 billion annually just by parking this money safely. Within his stock portfolio, Buffett maintains these key positions: Apple, 26% despite recent selling; American Express, 15%; Bank of America, 13%; Coca-Cola, 11%; Chevron, 6%; Occidental Petroleum, 5%; Moody's, 4%; Kraft Heinz, Chubb, and Berkshire Energy round out the top 10. Berkshire's wholly owned businesses include household names like GEICO, BNSF Railway, NetJets, Dairy Queen, and dozens of others that generate consistent cash flow regardless of market conditions. Looking at historical patterns, Buffett's cash position has consistently peaked just before major market corrections. In late 1999 before the dot-com crash, in 2007 before the financial crisis, and now we're seeing a similar pattern in 2025. As Buffett says, cash is to a business as oxygen is to a person, never thought about when it's present, the only thing in mind when it's absent. What Buffett is actively selling. Before we examine what Buffett is buying, we need to understand what he's selling, which reveals just as much about his market outlook. Buffett's most significant selling activity has been in Apple, which has been his largest position for years. After accumulating a massive stake worth over $177 billion at its peak, Berkshire has reduced this position by approximately 42% in 2024-2025. When asked about the Apple sales, Buffett remarked, "We still love the business, but everything has a price. We're making a portfolio decision, not a statement about Apple's future." Buffett has also trimmed his Bank of America position by 12%, selling shares worth approximately $3.2 billion. This comes after years of accumulating the bank's stock following the 2008 financial crisis. Berkshire has completely exited several positions, including Chevron, after building a $25 billion position; Vanguard SP 500 ETF State Street Financial Sector ETF Activision Blizzard, after the Microsoft acquisition. In total, Berkshire has offloaded shares worth approximately $143 billion, liquidating positions at what many believe to be near-market peaks. Buffett once said, "Selling is far more difficult than buying. With buying, you can always just do nothing. But once you own something, doing nothing is still a decision." Buffett's selling activity provides three key insights. 1. He's taking profits in positions that have dramatically appreciated. 2. He's freeing up capital for potential opportunities. 3. He's expressing caution about current market valuations. What Buffett is actively buying now. To the most important question, what is Buffett actually buying in 2025? Buffett's most significant buying has been in 5 Japanese trading houses: Mitsubishi Corp., Mitsui & Co., Itochu, Marubeni, and Sumitomo. Buffett continues building his position in Occidental Petroleum, now owning over 30% of the company, with regulatory approval to potentially acquire up to 50%. This appears to be a significant vote of confidence in American energy production. In a move that surprised many analysts, Berkshire completed the acquisition of Allegheny Insurance for $11.6 billion and is rumored to be evaluating other insurance operations for potential acquisition. Looking at the pattern of Buffett's buying activity, we see three clear themes emerging. 1. Value over growth, companies trading at 8 to 12 times earnings. 2. Real assets over digital assets, energy, commodities, infrastructure. 3. International diversification, particularly in Japan and Europe. For the first time in decades, Buffett is allocating significant capital outside the United States, with approximately 22% of new investments flowing to international markets. As Buffett says, the stock market is a no-called-strike game. You don't have to swing at everything, you can wait for your pitch. The problem when you're a money manager is that your fans keep yelling, "Swing, you bum." Comparing past market cycles. To fully understand Buffett's current strategy, we need to examine his patterns during previous market cycles. During the dot-com bubble of 1999 to 2000, Buffett largely avoided tech stocks despite criticism, increased cash position while others chased returns, was accused of being out of touch and past his prime. After the crash, deployed capital into quality businesses at bargain prices during the 2008 financial crisis. Before the crash, Buffett had built significant cash reserves. As markets collapsed, he went on the offensive, invested $5 billion in Goldman Sachs with preferred stock at a 10% dividend, purchased $3 billion in General Electric on similar terms, completed the acquisition of Burlington Northern Santa Fe for $44 billion. During the COVID-19 market disruption, initially cautious, selling airline stocks, gradually deployed capital as opportunities emerged, made targeted investments at favorable valuations, built positions in Japanese trading companies. Today's situation shows remarkable parallels to these previous cycles. 1. Building cash reserves ahead of potential market stress. 2. Selective selling of appreciated assets. 3. Patient positioning for opportunities. 4. Focus on businesses with tangible value. As Buffett notes, the less prudence with which others conduct their affairs, the greater the prudence with which we should conduct our own affairs. Buffett's current investment criteria. Despite changing market conditions, Buffett's fundamental investment criteria remain consistent. Here are the exact filters he's applying to investments in 2025. 1. Valuation discipline, price-to-earnings ratio below 15x, price-to-book ratio below 1.5x high. Free cash flow yield above 7%. Japanese trading companies trading at 8 to 10x earnings with 4 to 5% dividend yields. 2nd, durable competitive advantage businesses with pricing power, high barriers to entry, trusted brands with loyal customers. Implementation, blueprint for investors. Now, let's translate Buffett's current strategy into an actionable blueprint you can apply regardless of your portfolio size. I call this the three-bucket strategy, a simplified approach to thinking like Buffett. Bucket number 1, your safety reserve. This is your sleep well at night money. Like Buffett's massive cash position, this gives you both protection and opportunity. High-yield savings accounts, treasury bills, or money market funds. The exact amount depends on your personal comfort level, but Buffett's 41% cash position shows he values optionality in uncertain markets. In 2008, Buffett's cash reserve let him invest $5 billion in Goldman Sachs when others couldn't make any moves. Your safety reserve works the same way. It's both protection and ammunition. Bucket number 2, your quality foundation. These are your sleep well at night investments. Businesses you understand with strong competitive positions. For beginners, this might be broad market index funds. Buffett has actually recommended these for most investors. For more experienced investors, this includes individual quality companies with strong balance sheets. Buffett's holdings like American Express and Coca-Cola have been in this bucket for decades. Bucket number 3, your opportunity fund. This is where you apply Buffett's value hunting strategy. Look for businesses trading below their intrinsic value. Focus on areas Buffett is currently finding value: energy infrastructure, financial services, and international markets trading at lower valuations. This bucket requires more research, but potentially offers greater rewards. Conclusion and action steps. Let's summarize the key insights from Warren Buffett's 2025 portfolio strategy. 1. Cash is strategic, not fearful. Buffett's cash position represents optionality, not fear. 2. Quality over speculation. He continues focusing on wonderful businesses at fair prices. 3. International value. He's finding better opportunities outside traditional U.S. equities. 4. Remember Buffett's timeless wisdom. The key to investing is not assessing how much an industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company and, above all, the durability of that advantage. If you found this valuable, hit the like button and share it with someone who needs this message during these volatile markets. This is Wealth Leverage Lab, helping you build wealth systematically.